the section 3, verification of the accounting, which is you have 3 chapters, correction of error, then record, control account. So that what we're going to do is I will go through with the notes first. Then after that, we do the exercise. When I do show you the exercise, so basically, you're just in the one screen. But next week, I want you to do yourself. I mean, alternate, all the questions have to do yourself. Then you will have a split screen because I need you to do your own. So both have the same chance to practice. That's important to practice it. So now I'm going to do the correction of the error topic. Okay, give me a minute. I'll share the screen first. Okay. So for this topic is when accounting normally is quite common, human is making mistake when we do the debit credit. Last time, when a lot of time we use the big book to do the recording for the accounting, but nowadays I think I would say 99% above, most of the company using accounting software. You are very difficult to detect the error nowadays, but there's still a way to detect it based on the accounting experience that you learn. Then you will know that how to detect the error. But in account, some of the error, if not able to detect, we call the error not affect the balance of the trial balance. There are 6 errors that you need to take note. The term that you need to memorize. Other than that, other the error, 6 error of it, you will have the error will affect the trial balance, which cause your debit and credit total for the trial balance imbalance. At that point of time, when you have the imbalance on the trial balance, the suspect account coming in order to solve the problem of the imbalance of trial balance. Okay. When we have adjustment, when we discover the error, we will use the journal entry. Journal entry we have learned in the section 2. Journal entry in here, we use the general journal. Use the journal to put through the adjustment to correct the error. Then normally, most of the time in the exam question, the suspend account automatically will close when we adjust all the error. But sometimes in the exam question also, they might have the differences. If they have the differences in following question, they will ask you further. That's depending on the exam question set. Now we see the 6 error, which is not affecting the trial balance. And this 6 error, the term, you must remember. And what is the differences between the term? Commission, a transaction is entered using the correct amount and on the correct side. This correct amount, correct side, but in the wrong account of the same class. For example here, cash received from Malini credited to Malika. When we have the cash received from Malini, by right we should debit cash and credit Malini, sorry. But we make a mistake. We go and credit the Malika. The account still can be balanced. The trial balance still can balance because debit, credit, we complete the double entry. So there is because wrong account means that these two are the different accounts. Malini and Malika are 2 different persons. But both also same class means that they are fall under the current asset, which is the trade receivable. Correct amount, correct side, because correct side credit, but it's a wrong account. Because sometimes you may get confused with the commission and the principal. Okay, so that's why I need you all to take note. It's a wrong account, same class. Next, complete reversal. The correct amount is entered in the correct account. but the entry has been made on the wrong side of each account. Correct amount, correct account, but wrong side means that, for example, here, cash drawing debited to the cash account and credited to the drawing account. By right, when we have the cash drawing, we should debit drawing and credit cash. But we make a mistake. We go and debit cash, credit drawing. So in this situation, you have to make adjustment, double up the amount. So this adjustment will cost the double. For example, you're drawing $10, $10. But because we make a mistake, we go and debit cash, $10, credit drawing. This is the wrong entry. So we have to double up. In this case, when we do the adjustment, put through the general entry, we have to debit drawing 20, credit cash 20. It's a double up the amount because the reason is one is to reverse the wrong entry that make in here, to reverse the wrong entry. Second, to put back the correct entry. So here one to reverse this one. Second, to put back the correct. So that's why total double up the amount. Okay, next move on. If anything that not sure or not clear, you stop me and let me know and put into the chat, or you can talk. Okay. Now, omission. Omission means you totally forget. Totally no recording. There is no debit, no credit at all. There is a omission. When you have omission, you just need to put back the double entry. For example, like here, payment of wages not entered in the book. In this case, we put back the recording. We just debit the wages and credit the bank. So complete the double entry for the omission. Original entry, an error and incorrect figure is used when the transaction is first entered in the accounting record. The double entry will therefore use the incorrect figure. For example, the goods that we bought, 100, bought on credit but recorded 1,000. We accidentally go and put extra 10 at the back. Cost the purchases. It cost the purchases become 1,000 and credit for the trade payable 1,000. By right should be 100. So when we make this adjustment, we have to debit trade payable 900, credit purchases 900. Because this 1,000 minus 900 will get back the 100. So this is how the adjustment for it. Now next, continue the principle. Okay, the wrong principle happen is the differences in here. Here I say same class, but here principle is wrong class. Same thing. Correct amount and correct side, but wrong class. In accounting, our financial statement, you learn income statement and statement of financial position. Under the income statement, we have the revenue, we have other income, we have the expenses, we have the cost of sales. This is called the class. For the statement of financial position, we have non-current asset, current asset, non-current liability, current liability, and capital. So all this section, okay, we call class. Another word we call class. Sometimes we call section. Wrong class happen, like example, motor expenses debited to the motor vehicle account. Motor vehicle is under non-current asset. Motor expenses is under expenses. We accidentally put into here. So that's called principal. So don't get confused with the commission and the principal. Here is the same class, wrong account, but here is a wrong class, wrong section. Okay, next, compensating. Compensating means that in your trial balance, when you prepare it, you have more than 2 or more than 3 that make the error. But so somehow all the error, like example, your purchases. Purchases by right should be in the debit side. Sales should be in the credit side. And then another expenses, motor expenses in the debit side. Here we accidentally put extra $10. This one also extra $10. And here we accidentally make a mistake, extra 20. So eventually, both also still the same. No error found from the trial balance. So that is called error not affecting the trial balance. Compensating, there is more than 2 errors which is offset each other. So you couldn't see the differences. For example, in here, purchases account under added by 100 and sales return account over added by 100. This is both debit. One short, one extra, both in the debit side will also neutralize error. So in the exam, sometimes they will just ask you, what is the error? They just ask you the term, give the answer. Sometimes they give you the term, they want you to give the, what is meant by the commission, what is meant by the omission. And sometimes they're asking from the question, you give the example which is referred to this one. So depend on the exams. Any question before we move on? No, okay, then I will continue with it. The reason we open the suspend account, because in accounting, sometimes we need to close the book. We cannot wait because sometimes the error very difficult to find. Where is the thing come from? How we need to investigate. All this taking time. So in order to close the book, so we temporarily make the account balance. So that's why we use a suspend account. Suspend account is a temporary account, which is we don't know what is the reason. So that's why we temporarily put into here. Sometimes you hire a junior staff. This type of situation happen for the junior staff. The junior staff not sure how to put through the double entry. They are not sure whether when you have a mixture on the invoice, some invoice, for example, when you get supplier invoice, the supplier will say this 1 unit aircon cost you 1,000. Installation of the aircon, this is installation, cost you 100. At the same time, you got other unit in your house, the aircon. So repair of the aircon, 200. Total bill, they charge you 1,300. So maybe this person, the junior staff, they do not know what is the called capital expenditure, what is the revenue expenditure. So they will just dump into here. Then maybe wait for the auditor to decide. Ask the auditor to pass the adjustment. This could be happen in the small company. So everything they just dump into one account, so that the auditor have to adjust, or they will put into suspend to get the auditor to clarify it for them. Okay. Now next. This one normally is take longer time when especially come to month end close or year end close. But in the account, the real life of the account, if your account cannot be balanced and you have the suspend account, before the audit, you must clear it off, because if not, the auditor will have a lot of questions about your account. So in the company, we're not allowed to have suspend account actually. Next, open in the general ledger with a balance on whichever side the account will make the trial balance account balance. For example, your trial balance. you have debit and credit. Okay, so in here we have the set that, let's say, purchases, sales. Here is 1,000. Here is 900. Let's assume only have these two accounts, no other account. But account cannot be balanced. So in order to close the trial balance, we add suspend account 100 here to make it become balanced both sides. So when we open the T account, since here is a credit, so our suspend account will be have the balance in the credit side. If the other way happen, then it could be in the debit. So depending on the question. Okay, next Time of the error required suspend when there is only half of the transaction being posted. That means we forgot to do another side. But in the real life nowadays, most of using the accounting software. Accounting software, we set the control. This one unlikely happen because accounting software now, most of the accounting software, even a single cent difference, they also not allow you to do the posting of the account. So that's why there is a good about the accounting software. Next, when both entry has been made on the same side of the two separate account, I mean a person put two side same debit, both debit, then cause the account not balance. The entry has been made on the correct side of the account, but the figure differ. Means that forgot I put the account 100 here, but accidentally here credit I put 1,000. There's cost differences. Okay, let's move on. The journal entry for the correction of the error. If the account adjusted in the debit side, just to take note, if it's the account that you adjusted related to the income statement account. For example, you adjust debit purchases, credit trade payable 100. This purchases debited, it will cause the profit change. Debit side will cause the profit decrease. Let's say you have another account, which is that overstate sales 500. So you have to adjust this amount. So you have to debit sales to reduce the sales and credit, let's say trade receivable 500. So this sales debit, when is the debit income statement account debited, it will cause the profit decrease. So when you see the adjustment, because most of the time the question asks you to give impact on the profit. So the rule that you need to take note is that when it's an income statement account is adjusted in the debit side, will cause the profit decrease. Whether it's a expenses, cost of sales, or the income account or revenue account, whatever debited adjustment reduce the profit. For the asset, when we are debited, the asset increase. Liability section, liability, if we adjust liability debit side, it will cause liability decrease. Same using the accounting rule. Actually, is for these three is the accounting equation rule saying that asset equal liability plus capital. And when it's a debit, increase. When it's a credit, decrease. Whereas these two are opposite. Debit, decrease. Credit, increase. The general rule for it. But most of the time in the exam is testing this. They are testing you this part. Ask you to prepare the journal entry for the adjustment. After that, they'll ask for the impact on the profit. Okay, next continue. If the account adjusted is in the credit side of the journal, the impact on the all of these profit, asset, liability, and capital will be opposite. Okay, I will not write in here because it's to just try to memorize one side of the impact, the other side will be opposite of it. So far, okay? Can move on? Okay, now next. A statement of correcting the profit. Start with the profit for the year, okay? Profit for the year that you have, because in the question normally they will give you the profit for the year, how much of it. And then from your journal adjustment, okay? The journal entry that you put debit and credit. As I say, if the income statement account, related account, whether it's an income, revenue, cost, or the expenses, so long as the adjustment is in the debit side, excuse me, it will reduce the profit. If the adjustment in the credit side, it will increase the profit. And in the exam, most of the time they give you 3 columns. They want you to put in decrease column and the increase column and the balance. And most of the time, what they do is that this area, they will grade it. They won't allow you to write anything. So when you're not allowed to write, so the detail column, decrease or increase, the net amount, the total, get the net amount, put into here. Take decrease, if your decrease, let's say example, your decrease is 1,000 and then your increase is 1,005. So it means that this one, you have to put increase 500. So let's say here your profit before adjustment is 10,000. So you have to plus another 500, you come 10,500. But if your amount is, let's say this one is 1,000, this one is 750. So you take this one minus this one, you get 250. 1,000 minus 200. But this one is show a decrease. Put a bracket sign. Take notes. This one, put a bracket sign to show a decrease. And then you take 10,000 minus 250 to get the new profit for it, which is 9750. So that is how we look into these two numbers. If a negative decrease more, so we put bracket to take this minus the net. So far, okay, clear about the working? Just roughly the idea how we should do the correction error. So now I'm going to do the exercise now. Let's move on. Okay. As usual, I will do one question. Then next week, you'll show me what is the answer for the following question. Okay, let's continue. If anything, just stop me. Then we will discuss. Here they say that identify error not revert by a trial balance. Means that you have 6 error not revert by the trial balance. I just copy paste so that at least next week easier for you. So this is a 6 error is not affecting the trial balance. And what is this all? Which one is referred to which one? For example, an invoice received from a supplier for 657 was recorded in the purchase daybook. I mean the journal, purchases journal, has been for 567. Your first recording already, because you still remember that our flow of the account. First is a source document. And then we move to the journal. Journal, we have the 6 journal, which is that we have learned in the past. Okay. So this one is considered first recording. First recording have made a mistake. We call original entry. The first recording make mistake. This one is a original entry. Okay. Now, yeah, I have to put in, wait, give me a minute. I need to type in. After that, you all won't be able to see the answer. Let me put down a bit. So, number 1 will be the error of original entry. So, all the term, try to memorize. Okay, second, a sales return of 89 from trade receivable was credited. Okay, you saw the name of it. There are 2 different names, both also the customer. Credit, customer, but different account. So same class. So this error is a same class but wrong account. So same class, wrong account, we call error of commission. So this is a same class but wrong account. Okay, next is number 3. Cash sales of 820 were recorded in the account as debit cash, credit sales, but amount difference. The total of the travel expenses analysis column in the petty cash book was mistotaled at 30 rather than correct figure 50. So what happened is that the account in here, cash is 820, and then sales 800. Another mistake made is the travel expenses. We accidentally put 30 instead of the 50, and the petty cash book is we recorded 50. So now if we add the total, these two, debit and credit, you notice that our amount are the same, balance, no error. But how many error happen? Cash make cash sales is 800. That means cash is correct, sales account is wrong. Then in here, petty cash book is 50, so be 50, and here should be 30, but we go and put, should be 50, we go and put 30. So the total impact, no effect. But there are more than 2 error mistake made. So this one we call error of compensating. Okay. Anything, it just not need me to repeat or anything, just call me again. Number 4. Cash sales of 820 were recorded in the account as debit cash, credit sales. Okay, sorry, this is number 3, so we should do the number 4. A check counterfeit for the rent was entirely overlooked. Entirely overlooked means that we totally didn't debit, didn't credit. When you total forgot, we call error of commission, which is totally no recording. Totally no recording. Okay, question 5. The purchase of some new office equipment, 2003, was debited to the purchases. In here, purchases of new office equipment. This one should record under the equipment account, which is non-current asset. but we go and debit it to the purchases account. Purchases account is only for the goods purchased for resales. So this is current asset, but because purchases is under cost of sales, under the group of cost of sales. So these are two different uh, class, different section. So different section, wrong class, we call error of principle. Okay, error of principle is a wrong class of the account. Okay, there's one more question here, 6. The entry made for the payment of trade payable L Muhammad by check were debited bank and credited L Muhammad. By right, when we make payment, we pay to the trade payable. Trade payable should debit, bank should be credit because we make payment. Debit L Muhammad, credit the bank. But we go and make mistake that we go and put the debit bank, credit. So this is a wrong side. So this is error of complete reversal. So totally wrong side. Okay, the next one question, they ask that using the information in here, they ask us to make the journal entry to correct the error. So now I'm going to put into where? Let me put down a bit so that I can see side by side the journal entry. Okay. So for the journal entry, journal. Okay, this is the number. This is the details. I hope still remember the format. Debit, credit. So this is general format, general format. Okay. For number 1, I will not write the detail. I just would put double entry only, the adjustment. And invoice received from a supplier 657 was recorded in the purchase playbook as being for 567. Both sides also make the error. That means supplier account, what we have in here is supplier account and the purchasers account. Purchasers account and the supplier account, which is the supplier, they didn't give name, we put trade payable. Okay, if they give name, then you put the name. So in here, what we recorded purchases daybook journal, we put 567. When we have purchases journal 567 in the daybook or journal, the amount will transfer to supplier also same, purchases account also same. Both also understate. So if they both also understate, our adjustment will be same. Debit purchases, credit the trade payable. But how much the adjustment? Take the differences, 657 minus 567. So the answer is 90. So this is a amount that we're going to adjust. Sometime in the exam, they will ask you, give the narrative why you put through this adjustment. So we can say that correction of error for what? For the invoice and in purchases invoice that put purchases invoice purchases invoice understated in purchases daybook. If you don't want so long, you can also just put okay, also can put like this. Not necessary must follow 100%, but try to be short your narrative. So this is called narrative. We just want to do some refresh in case that you forgot the section 2 chapter. Okay, now the next one, a sales return of 989 from a trade receivable as money was credited to the account of. So these two accounts have a problem. Sales return, no problem. When we have the sales return, we will debit sales return. And from who? From S Mac me. But accidentally, we didn't go and put S Mac me. We go and put X Mac coin. So this account is wrong. So we here, since that we credited 89, so here is a credited, so we debit back. So we put S Mac coin and put the correct person name Mac me. So the amount 89. So as usual, if the question asks for the narrative for it, right? So what is your reason you put through this adjustment? You can say correction of error for S Mac coin account. So this one wrongly, or you want to put for S wrongly credited, also can. Narrative is not really 100% standard, so long as you give something meaningful. This purpose for narrative is in case from people ask you why you put through this adjustment, so you know the reason for the adjustment. Okay, now next question number 3. Question number 3 is cash sales of 820 were recorded in the account as debit. This one is correct. This one is understated. So what is the account is understated? Sales understated. Sales understated by 20. It should be credit sales because sales account is in the credit side. So we credit 20. And what account that have been wrong, which is understated, which is the travel expenses. So travel expenses account. So travel expenses account by right should be 50. We only record 30. So in this case, we have to add another 20 to put back the total become 50. So this is the adjustment that we're going to make. Okay, now what are the narrative correction of correction of sales and travel expenses account understated. So this what I'm going to write because I want to show that these two adjustments made because both account understated. Okay, next is number 4. A check counterfeit for rent entirely overlooked omission. I mean, we just need to put back what is supposed to account. Debit rent. Check means must be the bank. So amount 680. And what is the reason? So we can put correction of rent overlook. Okay, I put in one more word. Correction of payment for rent overlook. Make some short sentence and meaningful sentence will do. The purchase of some new office equipment, 2,300, was debited to the purchases account. So here, we have purchases wrong account. That means we have to credit. Okay, we have to, one more thing I need to highlight is that you notice that here, I put credit side first, but take notes in account presentation wise, okay? In accounting presentation, we always have to put debit first for the journal adjustment. So this one, we have to change it. Put the debit first, credit later. So all debit first, credit later. So take notes for it. Now, question 5. We should debit the office equipment. So we debit equipment and credit purchases account because purchases account is a wrong account. So the journal entry or the narrative that we can put correction of purchase of new office equipment. So this one can, okay. Now next 6. The entry made for the payment. This is a complete reversal. As I said just now, when you have complete reversal, you have to double up the amount. So we pay to Elmat. So Al Muhammad should be the one receive the money. Bank should be given up. But the amount had to be double when you have complete reversal. Because 1 to reverse, so this one, amount has to double. Okay, the reason is 1 to reverse the error, and then the second amount is to put back correct amount. So that's why it's double up. So far, this question okay? Is that too fast for you? Okay, not? Ashika? Okay. So as usual, this question I'm expecting you to do next week. Okay. And now we move on to the question 5. Correcting error involved the suspend account. So here they say that an account clerk was unable to get the total of the trial balance to agree. So debit side more than the credit side. So what we got to do is, so we have to find what are the error being here. So subsequently, the following error were discovered where there was a mismatch between the debit and credit entry. Here only have 3 errors, and they asked to prepare the journal entry to correct this error. Second, to prepare the suspend account. So I just copy the header first. Okay. So the first error is they say that cash sales of 3,640 has been correctly entered in the cash book, but has been credited to the sales account 3240. That means sales account is understated because 36, the amount, the correct amount sales is should be done, but recorded as this one. So this is an understate. So understate means that the sales account should be credited. So sales should be credited by how much? Take the differences. 3640 minus 3240. Okay, it's a 400. They say that correctly enter in the cash book. That means debit side is correct. You cannot touch the cash book account, which is bank or the cash account. So in this situation, this is a one side error. One side error, we will use the suspend. Okay, so 400 to balance it. The next one, number Number 2, the total of the purchases journal 700 has not been posted to the ledger. What we're going to post to the ledger? This ledger you have from the purchases journal. This total 700. Okay. When you this total, where you post to the purchases account. And under your purchases journal also, you have the individual amount. Individual amount. Okay, this individual amount, where you post to the purchases ledger under the individual supplier. And this amount, purchases account under the general ledger. They say, they mention total has not been posted to the ledger account. They are talking about this one only, not the second one. Second one, no error. Only the first one got error. So this type of error also one-side error. When you one-side error, we have to use the suspend account. So think about the purchases account first. Purchases account omitted. Purchases account should be in the debit side. So we have to do debit first. Debit purchases. How much of it? 700. Since we know this is a one side, so suspend account coming in 700. Okay, next. Question 3. Rent received of 1,700 has been correctly entered in the cash book, but has not been posted to the rent received account. So in this case, what can we do? We have to adjust it because they say that rent received correctly entered in the cash book. That means bank account, cash account, no problem, but has not been posted to the rent received. First of all, we need to think rent received. The word with the receive, this word, the receive, is trying to tell you this is a income account, other income. So other income is in the credit side, and we are omitted. We are not posted. That means we forgot to do the credit side. So in this case, rent received have to be in the credit side. So in here, credit 1,007. Also one side error. Those are automatically one side error. Suspend account coming in. So that is how we tackle the adjustment. Now next, they say prepare the suspend account. So prepare the suspend account. If they give you the date, you put 6 columns. If they don't have the date, then you ignore the date column. So let's put in, because here I think just need 4 columns enough. I don't put 6 columns. Suspend account. And let's see what are the information that we have. First of all, decide first. Debit more than the credit. That means our balance, okay? Our balance what now will be in the credit side because you want to balance off the trial balance. Take the 82. 82500. 82500 minus 8111100. So we have 1,400 as a balance right now for the suspend account. And based on this adjustment, we have debit we have credit, we have debit. Based on this adjustment, if the debit, you put debit 400. Here credit 700. This one 1,007. And in terms of detail, take their opposite account. Here, opposite account, sales. This one, suspend. Purchases. And this one, rent received. So now the next thing we have to check total debit, total credit. So sub the total. So if both are the same, that means this one. Okay, I need to delete it out. So I can just take this one will do. Yeah, subtotal. So far clear about the working on the suspend account? Can? I will send the recording later so that you can refer back. Okay, now let's continue because I'm trying to move a bit faster. I'm trying to show as much expression possible. So next week, you all will just take one class, the maximum 2 class to show this exercise. Then after